Bank of America came out with a zero down payment program, mortgage program, but what exactly is it? This is Mike with the Mike Molina team, also known as Loans with Mike on IG. I do not work for Bank of America. I am just speaking on the information that I've gathered from reputable websites online and also speaking with loan officers that do work with Bank of America. The opinions in this video are mine based off of the research that I've done. And so to understand this program, I'm going to give you a bit of background before we jump into the specifics of the program. And so as recent as August 4th, Fannie Mae started accepting lender-funded grants that included down payment assistance, closing costs, and financial reserves. And this is something that they were not taken on before, and this includes grants that fall under special purpose credit programs. Now, so before we kind of go into it a little bit more, Fannie Mae is basically the entity that buys most of conventional loans. There's Fannie Mae and Freddie Mac. And so they are already accepting lender-funded grants. Now, as we're kind of starting this video, if you know a little bit about that BOA program, sounds a little bit familiar. So BOA's new program also qualifies as a special purpose credit program. Now, these provide, what a special purpose credit program is that they provide a way for financial institutions to meet the special credit needs of people who have been impacted by lending discrimination, systemic racism, and redlining. So I did have a question about it because this program is for low to moderate income areas, specifically that are predominantly Black and Hispanic communities. And so someone asked me, wouldn't this be technically considered steering? In a way, it isn't, because it does fall under it being a special purpose credit program, which is basically trying to push the needle forward for people that have been discriminated by lending practices in the past. So what qualifies a program to be special purpose? There's two things. So the first one is the program is established and administered pursuant to a written plan that identifies the class of persons that the program is designed to benefit and sets forth the procedures and standards for extending credit pursuant to the program. So essentially, Bank of America's program does have a specific demographic that they are trying to push the needle for, which is Hispanics and Blacks specifically, that they're trying to go ahead and get them into home ownership. Number two, the program is established and administered to extend credit to a class of persons who, under the organization's customary standard of credit worthiness, probably would not receive such credit or would receive it on less favorable terms than are ordinarily available to other applicants applying to the organization for a similar type and amount of credit. That line is the reason why Bank of America is saying that there is no credit score required. Okay, this is not a bad thing, by the way. I'm not pointing out the flaws. I'm just giving you the information. So the reason why they're saying there is no credit score required is because that's the way to get it to fall under being a special credit purpose program, so that it is allowed to be bought in the future by Fannie Mae. Okay, that doesn't mean that 500 credit is going to get approved, and we're going to talk about that a little bit more down the line. Their goal is to do $15 billion in mortgages to low to moderate income buyers through May 2027. So that's their purpose of it. They want to lend out $15 billion. That's their goal through May 2027. They're doing that by giving 3% up to $10,000 to $15,000. I keep seeing that $15,000, but for whatever reason on their website, it says 3% up to $10,000. So I'm going to tell you $10,000 to $15,000 of forgivable money. This is important to note that it is forgivable. It's a grant, because some programs, they are second mortgages. And from what I've been told, you do not have a minimum time that you have to stay in the home in order to be able to get in this program. Okay, so if you buy this year, you can sell it next year and you will not owe that money back. That's what I've been told directly through a BOA representative. They are trying this program out in predominantly Black and Hispanic census tracts in cities like Dallas, Detroit, Los Angeles, Miami, and Charlotte. And there are specific areas within these cities, okay? So don't think it's all of LA, don't think it's all of Charlotte, don't think it's all of Miami. It's not. There's specific areas, and typically these areas are considered or called targeted areas. This is not confirmed directly through Bank of America. This is my assumption because a lot of targeted areas are low to moderate income areas, okay? And so targeted areas are basically exactly what it sounds like, low income neighborhoods, okay? Now, to jump into that, no minimum credit score is required. So they are advertising this, that you do not need a minimum credit score. They take consideration, or they factor in things like rent payment history, utility payments, phone payments, and auto insurance payments. All of that's going to be taken into consideration. But this is a tough one to kind of really wrap your head around here, because when we're looking at a conventional loan with a high loan to value, we know, at least professionals that kind of do this, that application won't run for lower credit borrowers. So while Bank of America may not have a minimum requirement, they still need these loans to be approved through Fannie Mae Conventional. So it's kind of a breakdown here. When you're applying for a mortgage, right, you give your information to that loan officer. The loan officer is going to run what's called an AUS, an automated underwriting system, based off of the information that you've given them, okay? And then from there, that automated underwriting system, in this case that goes directly through Conventional's guidelines, that automated underwriting system is going to say approve eligible, approve ineligible, or refer with caution. Refer with caution typically means that person does not approve for that loan. And from my experience and from many people's experience, doing a 3% down conventional loan at a loan to value of 97%, it is very rare, very difficult to get that loan approved, 97% loan to value, on a lower credit borrower, whether that be 620, 640, 660. It's tough. Doesn't mean that you are automatically going to get approved for that if you have a lower credit score. The good thing is that you can try. All right. This is a program that, as long as you're willing to live within these certain pockets of these neighborhoods that they're giving, it's something that you can go to Bank of America and say, hey, look, I want to kind of see if this is something that I'm going to be able to fall under. But just understand that just because they're saying that there's no minimum credit score required does not mean that this still has to go through some sort of process on the back end, okay? There is no down payment required, and from my understanding, there is no closing costs. Now, this is another thing that wasn't really explained to me, and so this would be also an assumption. My assumption is that when they say no closing costs, it means that there is no bank closing costs. But there are things that go into your closing costs that borrowers always typically have to pay. Prepaids like your homeowner's insurance, the start of your escrow account, sometimes taxes, real estate taxes, title fees. There's different things that go into your closing costs that the lender does not control that just fall under there. So my understanding is that no closing costs means that the lender may not have fees, or in this case, Bank of America may not have fees, but you still may have to pay some sort of closing costs on that back end that have to do with the other fees that you're going to be looking into, okay? There is no minimum or maximum loan size, okay? This is another reason why this falls as a special credit purpose program, because you can't really have a minimum or maximum loan amount, okay? But obviously, when it comes down to it, you have to look at what that income limit is and see if within that income limit, you're going to be able to even afford what that maximum loan limit is within that city that you're in. And also, from what we're hearing, these are low to market interest rates. These rates are not any higher than regular market rates, and sometimes they're actually a little bit lower. So don't think that just because you're getting this grant that they're going to, shoot up your interest rate an extra % or two, because the goal of Bank of America, at least on the face of it, is that they want to increase home ownership, so they're not going to overcharge people for these, okay? Bank of America is servicing these loans for 36 months. And so for those that think this is going to topple the real estate market and that these loans are predatory, you need to understand the servicing aspect of this, okay? One, this is a trial run to see if it works, and they're doing a very small sample size in terms of 5 cities. And on top of that, the loans aren't being sold to any other servicer or lender for 3 years just to see how they perform on the back end. So they're basically doing these loans. They're doing 100%, essentially 100% financing for this person, right? And what they're doing is for the next 3 years, they're the ones that are going to be monitoring, making sure that those person is making those payments to see how this works out for them. And if it ends up performing well enough after 36 months, that's when they're going to start getting these off their books, okay? So there is some sort of time frame for this. Now, to kind of go into the zero down payment aspect of this and how that kind of works, especially with this being a conventional loan. So to understand, there is a minimum loan to value when you're doing a conventional loan. Okay, when you're a first-time home buyer, that minimum loan to value is 97%. That means that you have to, as a borrower, come in with 3%. But when we're talking about what happened in the beginning of this video, where I went over what Fannie Mae was saying when I went over that Bank of America is giving 3% up to $10,000 of down payment money, how that kind of conforms to this, right? So what happens is you're still getting a regular conforming conventional loan that is a standard. Think of it like the opposite or the cousin of FHA, right? If you're familiar with FHA, it's the same thing. The difference is they're gifting you the down payment amount, or they're granting it to you under Fannie Mae's new guidelines that says that they're allowed to do that because Fannie Mae will buy that loan back. Okay, so it's not a 100% program that is basically done specifically through Bank of America, and they're the ones that have kind of been on the forefront of this, even though they have in terms of what they're doing with the grant program. This is not like something separate. It is still a conventional loan, and they're just giving you down payment assistance for that conventional loan. And the reason why I explain this is because you have to know that with a conventional loan, you have to follow conventional guidelines. And that goes back to that minimum credit score conversation that I was having with you guys, that even though they're not accepting a minimum credit score, conventional, Fannie Mae, typically, they have their barriers on that automated underwriting system that may not give you that approval when you're looking for it. Okay, so you're still probably going to have some sort of decent credit history in order for this to be able to work for you. But other than that, the last thing that I could pretty much tell you is that I know for sure is the income limit for Miami, the city of Miami. Okay, that income limit is 150% of the area median income limit, and that number is $90,999. Okay, and the great thing about this is a lot of times, something else that they're really overcoming here is a lot of times with down payment assistance programs, you are doing what's called household income, which means you got to show your tax returns, and whatever's on your tax returns is really what they're going to be using as your income. So if you're married and together you make $125,000 and it's only one of you on the application, but because you have to show household income on another program, you may not qualify for that program. With Bank of America's specifically, they're only considering whoever's on the application, whoever's going to be that borrower on the application, whether it be one person, two people, three or four, as long as that number or that income on that application doesn't surpass $90,999, you will be able to qualify for their in-house grant. So I spoke about this. I typically do these Monday mortgage minutes, which you'll be seeing more often on my YouTubes now. And when Fannie Mae came out with their, with them allowing lender-paid grants or lender-paid down payment assistance, I actually thought that it was going to take some time before somebody would be able to do this. But here comes Bank of America about a month later, already kind of being on the forefront of this, which is great because you want that. Because now, if they perform well, you're going to see other banks and other lenders kind of fall behind them to be able to do this. And it's really going to increase home ownership. So right now, even though they're doing it at such a small scale, you yourself, if you're not in these cities, would want this to succeed because this could be beneficial for you in the future to be able to get into a home if these programs become more available. The reason why they're not so readily available is because the amount of, delinquencies that come with these loans, right? The amount of people that don't make their mortgage payments and stuff like that. So you kind of want this to succeed, whether you're in that city, whether this falls under you or not, because this is going to open up the gates, or could open up the gates for more banks, more lenders to be able to offer these down payment assistance programs that are lender funded and still be able to get these things off their books when they want to, because that's also important too. Okay, you don't want Bank of America to fail off of this program, because then that means that down payment assistance programs are going to continue to not be as easy to get into as we try to make them, or as these people are, as these banks and as these other finance corporations are trying to make them. Okay, so that's pretty much the gist of that Bank of America program. Keep in mind, this is a regular conventional program, and I say that whether you really understand conventional or not, just understand that there is a particular set of steps that you need to take that is not just, hey, Bank of America didn't approve me, or I don't need a minimum credit score, or things like that, because even though that's what they're portraying to you, that is definitely not the case. You still have to follow in line. And like I told you earlier in this video, doing 3% down conventional is a very difficult thing to get approved for. Conventional, Fannie Mae is very, very strict when it comes down to it. Right? So even though you're getting that grant for 100% financing, that loan on the back end, the way that we see it, is that your loan to value is 97%, and we have to get the AUS, automated underwriting system, to approve you. And it's not that easy, okay? But any questions that you have, you can reach out to me. Once again, my IG is Loans with Mike. I am Mike Molina with the Mike Molina team. Thank you guys, and we'll speak soon. Peace.